Good morning. Today is May the 18th. It's time for another My Views in a short form video. It's been about 60 days since I did my last one. This kind of goes in front of, I'm getting ready to drop the most recent My Views from Wall Street to Center Street. So in that I will write about the history of B&H, obviously what's going on in the markets, and a little information on Social Security. So that's what will be packed into My Views. But what I want to touch on here is just kind of going back. As I said, it's about 60 days ago I did the last video, and at that point in time, in mid-March, I talked about holding tight, letting the war in Iran kind of play itself out and see if we don't get some improvement in maybe getting that war over with, but also just in the markets in general, and maybe some relief with gas prices. So along those lines, where I was right, where I was wrong, and as time kind of creeps on, again, that was 60 days ago, the market, as measured by the S&P 500, is up nearly 10% from mid-March to mid-May, the close on Friday in May. Oil prices, however, have continued to go up as well as the market has gone up. So if you look at the market, it's gone up about 9%, 9-10%, something like that. So that was a good call there. We've stayed basically pat with our investment strategies, and that has paid off over this last 60 days. Oil prices, however, as I said, we were about a little over $90 a barrel, roughly, in mid-March, and now as we sit here in the middle of May, we're at $102, $103 a barrel. So you do the arithmetic on that, we're up some 12ish, I guess, percent there. So what that means is that we continue to see pain at the pump and in grocery stores and prices in general. Put some perspective on that, would be that inflation was running on an annual basis at 2.4% at the end of February. By the end of March, inflation had moved up to 3.3%. And then at the end of April, it had moved up to 3.8%. So you can see prices are on the rise, and that is just being driven by energy prices. So what I would say to that is that what we continue to see, which is what we had talked about in many of these previous episodes, that what I think that this administration is trying to remedy is to try to make a more level, kind of outcome, if you will, for both Wall Street and Main Street, or as we like to say, since we're on Center Street. But during this war, from the 1st of March till now, we've seen just the opposite of that. As again, the market has basically gotten back to and setting new record highs. It's recovered nicely. Wall Street continues to do well. So prices, if you're invested anyway, you continue to see your assets inflate in value. And that's a good thing for all of you out there listening that are my clients, and those that are invested that aren't my clients at this point in time. But when you go to the pump, when you go to the grocery store, when you're buying anything, what you're seeing is that's where the pain is being felt, those increases right there. So again, it is right now, and I've had conversations at some depth with several people over the last couple of weeks, is that the pain that you feel is real. The affordability crisis is out there, and it is, kind of, as folks are out there looking at it, it's kind of more of the same. Wall Street keeps getting richer, and Main Street keeps struggling and not participating in that. And that is certainly the case right now. My views, and I won't go through them in depth, but anybody that wants to reach out to me at 423-247-1152 can certainly ask me some questions along the lines of what I think is going to happen going forward, or reach out to me, send me an email at jeff@bhretire.com. But I do think that this war in Iraq has got to come to some sort of resolution and end. What that looks like, I can't articulate. I've got some opinions on it, but this is not the forum for that. But I do think as we move in, and we're headed there quickly into the summer months, that we are in fact going to get this thing over with some resolution to it that is, acceptable to the American people and to the global picture as well. And so what that's going to mean is that we've got to get oil prices to come back down, and then when you go to the pump, which is really where people are feeling it, or on their electric bills, etc., got to see those costs come down. And as those come down, the price of diesel fuel comes down, and shipping and moving goods across the United States and across the globe will continue to ameliorate and come down some, then we'll get some relief. And then we'll march towards the July 4th celebration of our 250th year anniversary. And I think we will feel better certainly by that date. I still have a belief that by mid-June, roughly a month from now, is when we'll really start feeling better about where we are, as I think this thing is going to come to a head in the Middle East. It'll be complicated. There'll be a lot to it. I've got a lot more thoughts on that. But like I said, if you want to reach out to me by phone or by email, and I had included that earlier. But what I would say is that, we stay invested. We're keeping up and making, headway, with keeping up with the cost of living, because our assets keep going up in value. So if you need to look at and increase some income, reach out to me. There's some ways to do that. We'll look at the possibilities and the practicalities of doing that, and how we might do that. So again, reach out to me. But I'm going to close this out by saying, keep the faith, and God bless America. Thank you.